Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Now, my apologies once again for this messy and complicated daily chart. I assure you that it is necessary for me to interpret where we have been, where we are now, and what the opportunities may be ahead. Okay, so the pattern construction that led to the market moving higher started in between mid-March to early May, with the dark blue highlighted bullish shift pitchfork, which is still operational, with the market over recent weeks testing the lower time, currently 244.65, along with the nearby support of the rising mauve medium moving average, currently 245.25, and a congestion zone below between 241.05 to 243.40, containing the 2012 high at 241.05 and the November 2011 high at 243.40. I'll go into the very recent action shortly, but first I'd like to highlight some other larger and longer term patterns. In this I must discuss the large bright red April to late October this year ascending wedge pattern, currently 251.60 to 269.65. This pattern had been biding its time since late spring until 8 weeks ago, when we saw a significant false break higher, which only resulted in a small double top over September, Adam and Eve type. There is a more recent pattern as well, not so well defined, but still there, and one that has possibly been triggered. It is a mid-August to late October head and shoulders top, with the previously mentioned double top being a split head of the head and shoulders top. So you've got head and shoulders top, split head, and then another second shoulder. Between 4 weeks ago and last week, the market breached the purple highlighted neckline, currently at 250.30 on the downside. However, by last week, the market was having trouble sustaining the move low, and we are above the purple neckline again. There was so much of a move in time and price over the last 3 weeks below this neckline that I felt obliged last week to lay out some potential targets below. Though, as I said last week, and I quote, I fully understand I may have to retire them as soon as next week, end of quote. Thus, the primary target X will be down in the 225.55 zone, with a secondary harder to reach target X1 down in the 192.15 zone. These same conditions apply to the previously mentioned large bright red ascending wedge pattern. These would have a primary target X2 down in the 232.90 zone, right on the 50% Fibonacci line of the May to September move, with a secondary harder to reach target X3 down in the 215.45 zone. I also added last week, and I quote, I must emphasize once again, that I am quite prepared right now to retire these targets immediately, as the break lower from both patterns, though occurring right now, is tenuous. End of quote. For this week, I will leave those potential targets below, but if things stay the same as they are now, then I will likely retire them next week. I should also just point out that should prices break down through the 241.05 to 243.40 congestion below, then we have free air until possibly the target X2, where we have a large stratified congestion band between approximately the long moving average below, currently at 224.65, up to target X2 zone. I'll detail this congestion zone further should we get down there. London coffee. 20 weeks ago, I initially drew a bullish Andrews pitchfork on my daily chart. 13 weeks later, I finessed this into a shallower bullish shift pitchfork for the same move to show the bullish angle of attack of this market. It's highlighted in dark blue on my daily chart, And after a few false break attempts higher in late August and early September, the market has moved down to where we are now, in between the middle time above, which is currently 45.84, and the lower time below, currently at 40.23. The middle time has some additional reinforcements from the nearby slowly rising mauve medium moving average, currently at 45.82, whilst the lower time has a frontline defense just ahead of it, formed from the gold long moving average, currently at 40.97. Another pattern has also emerged from recent actions, and is highlighted in bright red on my daily chart. It is the late April to early September, quite large, ascending wedge pattern. That's currently 46.69 to 52.38. The lower uptrend had been reinforced and also helped in reinforcing both the dark blue middle time and the mauve medium moving average, though weeks ago it is important to note actually that prices breached this pattern on the downside 3 weeks ago and broke down through it completely 2 weeks ago. 2 weeks ago I also saw finally the market reached the secondary harder to reach target for the old early August to late September rising expanding wedge pattern. That originated as a bull channel, which coincidentally was a target for the small late September to late October bearish half hesitation. Okay, so with all those now done, let's look at the break downwards from the bright red large ascending wedge pattern. This would, I should temper that actually, this could have a primary target X1 down in the 39.45 zone, with a secondary harder to reach target X2 down in the 32.60 zone. Now I am mindful of the false breaks we have had with this pattern, so please be aware that though this right now looks like a good break lower, it may still turn back up. Why do you ask? Question mark. Well, it has looked like a good break lower for well over 3 weeks now, and we really haven't seen that much exploitation of the downside. That being said, what we have in the way lower, what have we actually in the way lower to stop the decline? Well, we have limited support below the April 2024 high at 43.38 until the gold long moving average and the dark blue lower time. And those two should be the main obstacles to the move down to target X1. Target X2 is obviously harder, but the best support seems to be the congestion band 32.60 to 33.63, containing the combined January 24 high and the May 24 low, both at 32.61. I suppose it all comes down as to whether the market has the strength to break the gold long moving average and the dark blue lower time on the downside, and the courage to face them both in the first place. Right now it is a finely balanced, though the longer time goes on the more it favors an attempt lower, just as long as it isn't too long.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.